Good morning, everybody, and this is your S&P 500 day trade setups for today. So we have a trend line break. Now, that in itself is fairly interesting. We've broken through some levels, and we've also confirmed a rejection of a fairly strong area, and that was 3908 or 3900. We are sort of below 3,800 at the moment, so that would have been the next logical choice, but now we're at 37, what are we now? 3771. Back in another area, a fairly interesting area of potential support, but we have broken through that. Now there's a couple of things on the go here. So first thing is we broke the trend line. Oscillators are crossed over, pointing down and moving down. They have separated though, so that's one thing you need to pay attention to. And then the other thing you need to pay attention to is that we do have a bullish crossover here. So yeah, very difficult to call at the moment. The noise from the Feds was pretty much as expected. There's no hint of a turnaround just yet, so they're still going to continue on the path of raising interest rate hikes. So they're monitoring data. Your algorithms are monitoring data. Your investment houses are monitoring data. Everybody's looking for any sign that we're going to have a reversal in the thought process of the Feds. Now, if you start looking at the results that have been coming through, so the earnings results coming through, not really that doom and gloom at the moment. So it's, you need those things to start tightening up just to convince people that consumer spending is tightening. And then they're going to need to start changing tack, to start looking at other ways of boosting the economy. So yeah, it's a bit of a seesaw that everybody's playing right now, and unfortunately we are in the firing line in this financial system that we've created. So right now we've got a bullish crossover. We are below the 155 though, so there are signals of a long forming, a continuation, another attempt at this level. But then again, there are also signals of a potential rejection, in other words, a short forming as well. So for me, I want to be going with the trend. At the moment, the 3 hour is also still, moving average is still bullish, but we're starting to break through structure. I don't see anything here on the 3 hour. There's nothing here that indicates I must be short, and definitely don't want to be long here either, because there's nothing that's indicating that we need to be looking at a long. So if we start moving down to the lower time frames, and this is where it's going to get interesting, we do have a crossover here of the moving averages. We've got this trend line break, and we've got a grouping of the oscillators. So we've got two bearish signals, one bullish signal. Don't really like that. So what we should be looking for is, where would price be going to? Bear in mind we've got non-farm payrolls coming tomorrow, so we could just do nothing until that, because that's one key bit of data that everybody will be paying attention to as well. But this zone would interest me. You can see the moving averages are here, and we've got some potential resistance in this area. So that would be an area I'd be paying attention to. That's 3812 and 3828. So you probably get 3800 in the mix there as well for a potential rejection. So that's kind of the view that I've got right now. If we don't get up to there, then it's a clear just sit on hands and wait, because there is no structure to the left which is going to indicate a potential area to sell off. So that's kind of my view at the moment. I want to see us get back up here. Even on the 15 minute, you can see confirmed bear trend here, and you can see that would be the zone. Now, hindsight being a perfect science, you can see this was the interest rate announcement, but look at all the moving averages. They were all bearish, and then this was the speech afterwards, which was no good news, and basically whatever gains came out, because I said, oh, interest rates as expected, not worse, so it's obviously going to be fine. And then the Fed start talking, and then it fell off. But hindsight being a perfect science, that was my structure there. There was a rejection of that structure. But if you look all the way up, just pick another time frame here. Any one of these levels here, and you can see that's another key area there on the 30-minute. See, there's support, there's a whole lot of resistance. So pretty key area. If I start dropping down to the 15-minute and just look what happened in that area, you can see it's not clean, which is typical, but we had this potential hanging man, and then we had the engulfing bar over that. So there was price action here indicating for a short, but very volatile. We're talking about a 500-point stop loss, so don't like trading that kind of stuff. But anyway, this gives you, it's always interesting just to analyze, where was the rejection, what does the rejection look like, and when you start looking on different time frames, and you actually start picking up those zones. And a lot of times you can, even if it's a very small contract, you could have taken a 500-point stop loss with a very small contract, and you still would have gained, what's that, almost 3 to 1, 2.5 to 1 risk to reward. Anyway, this is the zone I'm paying attention to. I want to see price come back to 38.28, 3800, 38.12, anything in that zone. Get a rejection there, then I'd be looking for a continuation to the downside. Bear in mind, non-farm payrolls tomorrow, so you could just sort of meander a little bit or keep meandering down. It's going to be very difficult, and even if you've got time to watch 5-minute charts today, I suppose we could argue that there is an area of potential rejection here. This looks like a bit of a triangle forming, though. Oscillator's not doing anything, so we're going to need to wait for the European markets to open, but I suspect that is the zone I'm paying attention to. This would be another little level if it holds today, but I don't see any big downside targets at the moment either. That's the other thing. We're right in an area of potential support. So if you look at that, and I just widen that zone, you can see that's where we are at the moment. So there's a massive bit of support here. So yeah, breakthrough that, let's put it this way, breakthrough 37.57 and a retest of it will probably open up a few levels to the downside. You can see there's a massive amount of noise here, so it could very well just drift lower, and something like that would be another fairly big area down here, and that is 37.12 or 3700. So if I just come back to the 8th hour, and or even come back to the weekly, all the levels I've just put in, look at the noise, look at the chaos here, and nice big engulfing, almost engulfing bar. Right now it's an inside bar. Well, it won't be an engulfing bar, but it's a nice big bearish bar that is formed right here on the 155 EMA again. Anyway, guys, this is a sit in hands kind of scenario for me, unless we see, I want to see a rejection off this 3800 area. We get a nice rejection off there, then it'll be a decent short down to potentially 3750. If that gives way, then 3700 is what we'd be aiming for. Hope it helps, and we will catch up with you tomorrow morning. Cheers for now.